Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first and only global virtual accelerator for startups. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And that is revenue. We're not trying to get 1 million entrepreneurs financed because we do believe very heavily that even entrepreneurs who are building businesses that are going to be slower growth businesses than what investors look for are worth building and worth supporting. So you will see a lot of entrepreneurs working in this community who are building bootstrap businesses. Nonetheless, we do also work with entrepreneurs who are raising funding, obviously. And this is our 374th free mentoring roundtable. So this has been going on for a long, long time, since the fall of 2008. And the event is being recorded. You will have all recordings available on our YouTube channel, 1M1M Roundtables. If you're live tweeting the show today, please use hashtag 1M1M. And on Twitter, our two handles are at 1Mby1M and at Stromana. We publish a lot of really interesting material, learning material, inspirational material, educational material through these channels. These are the call-in instructions. And we're not quite ready for call-in yet, but this is a roundtable. It's not a broadcast. So there is programming, obviously, that you're here to listen to, but there's also the opportunity for you to call in and participate, and also participate in public chat. And we'd like you to do that because we want everybody's input and participation as much as possible. That's how you learn the most. We're going to start today's session with Jon Staenberg, Staenberg Venture Partners up in Seattle. Jon, welcome to the show.
It's great to be here. Thanks.
Jon, can you adjust your line a little bit so we get a slightly better audio? It's a little bit low.
It's a little bit low. Let me see what I can do. Is that any better?
It's a bit better, yes. Well, welcome to the show. We're very happy to have you here. You're one of the most prolific angel investors in the Pacific Northwest. Tell us about the focus of your investments, and let's introduce you to our audience.
Absolutely. Well, I'm a little disappointed it took 374 shows to get me on, but I'm glad to be here. Just kidding, of course. Congratulations to you for doing this. I think it's really important. So thanks from the community for doing this. It's fantastic. It's nice to be interviewed. I'm kind of an old dinosaur at this point, having done this for some 30 years. I originally moved to the Pacific Northwest to work at Microsoft in the late 80s. Yes, I'm old. And have been doing venture and angel investing for that long. I've been a partner in 3 funds. I raised 2 funds under an eponymous name, and then joined a group out of LA called Rusty Canyon Partners, where I was a partner as well. And you asked specifically what the focus of my investments are. Yes. And, I don't really have a specific geography, and we're going to talk about that, or sector focus. Having done this as long as I have, for me, there are some areas when it comes to pattern recognition and people who I've worked with in the past that I tend to focus on. To be clear, I'm not sure I'm very good these days at keeping up with all the changing trends and all the differentiated, almost seem iterative kinds of companies being formed. When I started doing this, my focus was pretty clear. It was mostly enterprise software, and it was a completely different game. There were fewer venture players, and you'd put several $1 million to work and building code, and it would take a couple years, and then you hope you'd figured it out and you were solving a big problem, and then you try and get a couple of customers with a long sales cycle. That world, of course, has changed dramatically. And so while I remain active and excited, I would say that I'm much more opportunistic these days than I am actually focused on any one thing. Now, having said that, I am certainly excited about and really interested in learning more about several sectors. So, for example, you know, it almost sounds cliche, but I do think blockchain and Bitcoin related activities are extremely interesting and potentially significantly game-changing opportunities. Given that my background was in enterprise, it's hard to ignore what's happening in the cloud as everything moves to that, for example. So I guess what I'm saying is I'm trying to build off all the things I've done. I've made, gosh, well over 300 investments at this point. So hopefully I can take some pattern recognition from those previous investments and apply it to the modern era.
So tell us a bit about what have been some of your most interesting investments in the 300 or so that you've invested in. What really stands out and why?
Gosh, you know, when you've done that many investments, I'm sure there's some I've even forgotten, but the thing that's interesting to me is that I can honestly say you never know what's going to work, and I'm often surprised both downside and upside, meaning I'm often surprised on the upside. For example, I had a company that I had almost said, gosh, this is never going to amount to anything, and it had over a $2 billion exit in the last 12 months. So, wow. I mean, it's pretty exciting, and that was in the...
What was that? What company was that?
Square Trade.
Okay.
In warranty, it's in the warranty business.
Mm-hmm.
You've probably seen their ads.
Yeah.
Yeah, exactly. But again, I was in that company for a very, very long time, and had not expected that outcome. And what's interesting about that one is they had received a very significant investment a few years ago from a major private equity firm, not a venture fund.
Mm-hmm.
So that was not a traditional path. And that private equity fund took it to the next level. So that's an example of one where, gosh, in the day, and I'm sorry to keep talking about the past, but I've been doing this long enough. Back in the day, it was a pretty traditional path to an exit or a non-exit, meaning you did a Series A, a Series B, a Series C, and then you either got acquired or hopefully went public. But today, there are so many different paths to this that it's both exciting, but also I think is created a lot of noise, if you will, or a lot of confusion in the marketplace, which, you know, therein lies opportunity. I'm happy about that.
Well, that noise is what we are trying to kind of help cut through and you know, come up with some sort of a logic to understand that noise, right? So, I mean, the times that you're talking about, I've been in this business for more than 20 years as well. So I did 3 companies in the 90s, and then I'm doing this one now, but in the middle, I consulted for a long time. But, you know, in the 90s, you used to do seed investment, and then you used to do Series A. And now you do pre-seed, seeds, post-seed, pre-Series A. What is the difference between post-seed and pre-Series A? I mean, this is not so simple anymore, right, to understand for entrepreneurs who are doing it for the first time. It's not easy for them to understand where they fit in and who invests in what. So have you actually, you know, given these are the trends, have you selected where you want to play in this continuum stage-wise?
Yeah, no, so I haven't, because, you know, I know the fashion is to say you are a X or a Y or a Z. Maybe it's a bad strategy on my part to say I'm more opportunistic, but I don't have a fund right now. I'm investing on my own, or I'm investing with syndicates. I do AngelList syndicate. I have a group of people I work with as well. But the point is, I'm more interested in, and so I'm not going to be your typical interview, I'm more interested in people that I back people first, for sure, at this point, you know, people always ask that question. I get that question every time. Is it market or is it people? And for me, with the noise being what it is, I am backing people first.
People, okay.
Yes, the market's got to be there, okay? But that to me, so if you look at the kinds of investments I've done recently, I'll just give you two. I think it'll be illustrative. One was a company called Tomorrow.me, which was, I actually did an AngelList syndicate with it, and I'm very excited. But it's a company that's creating estates and wills optimized for a mobile device, mostly for millennials, but for a very large audience who, surprisingly, there's a large audience out there that does not have a will yet.
Okay.
Okay, and this was the first round of funding, and there are some great people around the table, great investors around the table, but the team had worked together. The team had done startups before. I was super interested in it. And by the way, it is not an obvious category, and it hasn't really been cracked before, and we'll see. But it is a big category, and it is a team that I believe is mature enough, has seen enough, understands.
You can figure it out.
Right. That's one example. Another one is and that was early stage. So you ask about stage. Another one, which also is early, but would be considered A or B at this point, is a company called Stellar, which is trying to be, if you will, the Uber/OpenTable for private jets. And this is a really interesting company that could create the marketplace, really interesting and also large opportunity for all the deadhead flights that are out there carrying no passengers. Okay.
Yeah.
Very different field, because it's being run a spin out of a major aerospace company, and the people who are leading the round are more of a private equity firm than a traditional venture fund. And actually, I had a conversation about this yesterday with someone who said, well, you know, is that a problem? Because the culture of a traditional buyout private equity fund and a venture is very different, right? So in some sense, maybe the right answer to your question, to boil it down, is I'm kind of looking for the differentiated things. You know, if I see, it seems like every day I get deals that are a little bit different than something I saw the week before, but not terribly different, right?
Dramatically different.
Right. And you see where people, the thing that's interesting about today that now I'll refer to you since you've been doing this for 20 years, the thing that's different today is that if you can dream it, if you can think about it, if you can play with an app and see, oh, what if I did this? You can immediately say, oh, I'm going to start a company doing that, right?
Yeah.
And that's both good and bad. Right.
Yeah, the entry barrier is very low, and however, to make something a success is still difficult, no matter what. It's cheaper to get some distance going, which is why I think all this, you know, commotion is happening in the early stages right now. But it's still difficult to make something work.
It's not only cheaper; it's being encouraged.
Yeah.
I mean, if you think
it's glamorous.
It's glamorous. It's sexy. You know, I'm in the wine business also, and everyone assumes it's the most exotic, and I call it lifestyle pornography. Everybody from the outside looks in and says, "Oh my gosh, that's so fun. That's so exciting." And yeah, there are days. You know, look, I've got an empty bottle right here, and I assure you that people hearing this are thinking, "Wow, he's in the wine business. Let's talk about that. And isn't that great?" And well, it's hard work.
Wine business is hard work. And if you look at what happened in Napa and Sonoma this year with the fires, these guys are really hurting. So anyway,
and forget sorry, I won't interrupt, but forget natural disasters. The wine business is not a bad parallel, because what's happened in the last 10 years in the wine business is it's become exponentially more competitive. Not only are probably there's double the number of wineries, but there's microbreweries, microdistilleries, there's cannabis, okay? And people forget it's still a business at the end of the day. And that's the same thing that's happened in the world of startups. It is, to your point, barriers to entry, it's hyper-competitive.
Yeah.
Yes, there are more, because there are less barriers, more people are doing it. That means your idea better be that much better and that much more differentiated, if that makes sense.
Yeah, and your competition is international, which brings me to my next question, which is, what is your geographical sphere? Is it Pacific Northwest? You said you invest in LA. What's the perimeter?
So, you know, I get a lot of people, and this is a direct result of what we've been speaking about. First of all, I get a lot of over-the-transom kind of requests, and I just want to say to people, please don't do that. I mean, with all politeness and with all respect, I'm just not going to entertain that. If I don't know you, or I don't know somebody that knows you, or somebody who's already spent a lot of time in this who I already know, it's just, I can't do it. I don't have enough hours in the day to do that kind of due diligence. Secondly, if you're not in either the 415 or the 650 or the 206 or the 14, if you're not in the Pacific Northwest or the Bay Area, where I am a lot, I live in both places, it's just really difficult for me to get over that hump. Because I do want to come visit you and spend time and hopefully add value. And so if you're out of those geographies, then there has to be some other really compelling reason why. And I do it. Look, I've invested in Argentina. I've invested in New York. I have invested in a variety of places, but those are the exceptions to the rule. Generally speaking, I'm focused on the Bay Area and Seattle. And what I try and do to differentiate myself is I say to people, how can I help you? If you're in Seattle, how can I help you go to Sand Hill Road? How can I help you do biz dev? One company that I invested in, AppVance, wrote me an email this week and said, okay, the product's done, it's working, we've got customers, I need 14 introductions. So I spent 2 hours, and 14 very large companies in Seattle they are now introduced to. And I can do that because I have 30,000 people on my LinkedIn. I can do that because I do CEO and founders dinners every single month in Seattle and San Francisco. So I'm pretty clear about where I'm trying to add value. I also know where I'm not so good, and I know where, but I do know where other people are great, and I want to help bring them into the fold. So this is a very long-winded answer to your question about geography.
No, it's good.
It gives you a sense of how to think about it.
One thing you said earlier, Jon, is that you are interested in Bitcoin. Can you talk a bit more about how you're analyzing the Bitcoin situation, the opportunities? Bitcoin is not a capital-efficient area to invest in. These are going to require a lot of money. If you're doing a Bitcoin venture, typically it's going to be an expensive, capital-intensive investment, more often than not. So how are you parsing the Bitcoin opportunity?
So let me step back for 1 second from that question. When we started doing this 30 years ago, 20 years ago, technology was in a serial rollout. Mm-hmm. I remember literally the PC was the technology. And then, you know, we talked about client server. We talked about the network. We talked about the internet. And this was, now today, we have an absolute hurricane of new technologies being hurled at the world. And so there's no longer just one thing to focus on. So this conversation, what you just asked could be, tell me about your interest in the cloud. Tell me about your interest in personalized medicine. Tell me about, you know, there's 10 things that, like Bitcoin, that you asked mm-hmm. about. And so I have to say, I am just at the beginning of my study of Bitcoin.
Oh, okay.
So I can't sit here and tell you how I'm going to invest in it. I'm sticking a toe in the water. I think it's such an important, and not Bitcoin, but the whole crypto, blockchain technology, right? I think it is, it's now to the point where we cannot ignore it. And so, I think there's 10 of these things. So the question for myself that I ask is, where am I going to focus?
Yeah.
Right. And at the end of the day, I may just say, come to the same conclusion that you've offered, which is it's not capital efficient. An angel investor can't really make a difference, that I'll get clobbered by the preference, all the things that not everything is appropriate for an angel investor, as you know.
Right, yeah.
So I don't know what that looks like yet, but there are a couple areas that seem very interesting to me and that I'm starting to spend some real time on.
We are obviously seeing.
I can say one other thing. If you have a Bitcoin opportunity, I'm more likely to listen to it because I'm trying to learn right now.
Yes.
So this is one thing that investors should find out as they're talking to people. We only have limited amount of bandwidth and time. So what are the areas of interest right now, so that if you're going to approach an angel investor or a seed fund or an investment group, what are they interested in?
Yeah.
Because quite frankly, that's one of the ways I learn.
Yes, no, I understand completely. I was, after doing 3 startups, I was an EIR at NEA for some time, and that's what was the point of doing an EIR, is to learn what else is going on, who's doing what are the trends, and so forth. And part of what I love about my job is that I get to learn from all these, thousands and thousands of entrepreneurs.
It is absolutely one of my favorite parts of the job. People ask me about venture, and money aside, right? It's a chance to learn every single day. I learn
intellectually
so much
very stimulating.
Absolutely.
So actually, what I was going to say on your Bitcoin comment is that we are looking at blockchain opportunities where some of these entrepreneurs want to create a cryptocurrency-based, ecosystem of their own, and they want to list on an ICO and raise, $65 million. And I'm sitting there thinking, I'm not so sure about this, line of thought, because this is like a very high failure probability of a thing that you're going after, and you want to sink all your personal savings into this. And I'm not sleeping very well listening to your pitch.
That's the thing when you've done this, you've been around the block a few times, you can't help but think this is not going to end well.
Yes, exactly. So
I'm waiting, by the way, I'm waiting for my taxi cab driver to tell me to buy Bitcoin, and then I'll know.
Oh God. So, I'm going to flip the question a little bit. Obviously, you see a lot of different types of companies. What trends are you seeing in your deal flow that are interesting? Is there something that you can call out?
Well, I think I think that what is interesting, maybe there's one trend. What is interesting to me is we used to say when I worked at Microsoft, we're in the first inning. And by the way, I have to give a shout out to the Astros, because I thought it was a great World Series. I'm a huge sports fan, so if I'm going to use a baseball metaphor, I have to do that. But what's interesting to me is we're not in the 9th inning today. I don't know what it is. We're in the 3rd inning. But we are at such an inflection point. The most interesting trend is, where can we apply technology? What are the startups that are applying technology where traditionally we used to call these dinosaur industries? They'll never change. There is not an industry that's not being touched today by an insertion of new technology. And so wills and trusts is an example, right? Immigration law. I invested in a company that's changing the way that people are able to get status and work through the immigration process. Again, that's a very old line industry, but it can be disrupted. I'm working with a company that's doing term life insurance, and it's never seen a technology like we're presenting to. So my point is, we are thinking about now way beyond the traditional tech industry, because everything is in the tech industry.
Actually, this, different verticals, niche verticals, where there is a lot of outdated workflow. This is one of my favorite kinds of businesses that revamps that workflow and inserts even AI into it and really adds a lot of momentum.
Right, absolutely. So you and I are thinking about that the same way. And by the way,
yeah,
is not sexy. Not sexy is very sexy.
I agree. I completely agree. So I'm going to ask you a few questions that are broader trends, and I want to understand how you are processing these trends. One of them is, how do you process the current investment climate where capital is moving further and further upstream, and how does a seed investor, or an entrepreneur for that matter, mitigate the Series A gap? There's been, for the last few years, the number of seed investments is huge, 50,000, 60,000, 70,000 investments, but Series A remains constant, 1,200 to 1,500 range. So a lot of companies are falling into the Series A gap.
Well, and they're falling into it because they're not being thoughtful about how they are different. I mean, you say, how do you navigate it? You create a company that has enough different plan and enough runway. I mean, how many companies have you seen that don't raise enough money? And then
people are scrambling, right? People are scrambling, and there are a lot of people in the industry right now who are also scrambling to put in little bits and pieces of money. So somebody is willing to put in $25,000. By the time you get to raising Series A, you've raised 6 rounds of financing already in little dribs and drabs.
100%, right? And the other thing is, I love to refer to the millennial problem, which is the bright shiny object, right? Okay, we better pivot. Oh, that didn't work. Well, okay, pivoting sometimes is a completely appropriate response, but you have limited amount of money. You haven't raised enough money. You pivot twice, and guess what? What do you have? I mean, I do get those calls, and people say to me, "Well, is this fundable now?" Well, you should have asked that question 3 pivots ago, right? I don't have an answer to your question, how do we deal with the gap, except to create a great business.
Yeah, that's what we do here in the program. Is we basically focus completely on fundamentals and focus on customers, focus on revenues, paying customers, and so forth, and at least be able to show that we have a path to velocity if it's a funding, if it's a company seeking funding. If there is no path to velocity, we discourage people from going after funding, because you can still build a business, but you shouldn't be raising funding if it's not a high velocity business.
Well, 2 things. One is, people get money and they assume that it doesn't matter how much they got. Let's say they were trying to raise $750, they get $350 or $400, and they're like, okay, well, let's go with what we have. But that's sort of a silly logic, because you're going to fall short, right? You are purposely putting yourself in that place. And so it takes a lot of discipline. People get I love entrepreneurs, right? They're optimistic, they get singularly focused, but at some point you need people like you to say, wait a minute, this isn't going to work in all likelihood because of this. It's interesting. It's a great company that I'm very, I tell the founders here in Seattle called Smartsheet. And what's interesting, and this, I don't know if this would have happened today, to be honest, but they were down to their sort of last few dollars. They needed to raise kind of this bridge round. One of the larger venture funds here came in, but it was a down round. They couldn't raise much money. They ended up raising $1 million. Now they're on a run rate to do several $100 million, and it was that moment. They are the exception. And by the way, it was entrepreneurs who had done it before, who came from humble backgrounds. That is the exception. Okay?
It's
harder, and that was several years ago. Today, when I see those companies, I think to myself, it's a shame, but someone should have said to you, you should raise more money. And that's what people, the markets are efficient in some way, right? People are starting to learn this.
Yeah.
And it's so quickly, it's going to take a few years. People are going to say, wait, that wasn't really the right way to do that.
Right. What do you think of unicorn mania? As a seed investor, you could get buried under later stage liquidation preferences. How do you protect yourself?
Well, I'll be honest, and I'm a secondary investor too. So I actually like some of the unicorns.
So you sell?
I sell and I buy. I do both.
You sell and you buy. So let's just elaborate this. You and I are kind of you're talking in code language, which I don't think the audience is understanding. So explain what you mean by where you sell and you buy.
Well, there are so to your point, the unicorns are these companies that it's harder than ever to go public, right? There's a variety of reasons for that. So there are these companies that are out there that have these big valuations, and there's a variety of reasons why they have that valuation. Some made up, some real, some because of their business. In some cases, you know, there's opportunities to go to the secondary market and take liquidity as an angel investor, and I've done that, right? But there's also companies out there that I think are going to be worth a lot more than they are today, and just because they're not public doesn't mean they're not great companies. And so I'll go in sometimes and buy shares of those companies. I mean,
in the secondary market.
It's the secondary market. And at the end of the day, right, what am I here? But the truth is, I've got, this is about ROI and return on investment. And I think there are some great opportunities within those. But of course, there are lots of unicorns that are unicorns popped up for reasons other than their business.
Cooked up unicorns. There's a lot of cooked up unicorns out there, and in those cases, I think the right strategy is to sell out for early stage investors and just get out of the whole mess. And in fact, I would say if entrepreneurs have found some suckers to put in that kind of money and that kind of valuation, they should also sell good chunks of their ownership and take liquidity.
Well, it's interesting. I mean, this all comes back to the fact that 15, 20 years ago, hedge funds weren't playing in our space, right? And they're not the only ones to identify here, but there's money coming into the system that was traditionally not there. And there's money saying, how do you get more than 6% return?
Yeah, and also I think there's a tremendous amount of money in the system right now. Even in the early stage game, you know, anybody who has, raised a little bit of like $2 million fund, $5 million fund, there's a lot of those playing in the market. So that you could be taking money from a lot of people, but be careful whom you take money from and with what investment thesis and what expectations, and, you know.
And not to mention how many different angel groups have started and crowdsourced angel groups. I mean, the world is awash in money right now and looking for places to place it. And, you know, again, like the wine business, venture and angel investing has been perceived by the outside as very sexy and very lucrative.
Sexy, yeah.
As we all know, the vast majority has not been.
Well, and I think the thing that mathematically is incorrect in this industry, which drives me really crazy, is that there are 500 micro VCs and then probably another 500 AngelList syndicates. I don't know how many, for some large number of AngelList syndicates, all think they're going to find unicorns. It's mathematically not viable to find that many unicorns.
That's correct. That's correct. And so, you know, I think it's funny. People often will ask me about, well, okay, are you looking for singles and doubles? Would you invest a little bit today to get a $20 million outcome, or a bit smaller, not $1 billion? You know, this so-called magical number, which is always funny to me. By the way, maybe I'm not shooting for a $20 million outcome, but 500 million, 300 million, 200 million often is a fantastic outcome. Sure. I am looking for a reasonable multiple because, look, I've done this so long that I know I need 10x or more in my deals to make up for a lot of bad deals.
For a lot of
There is no question, right? What I have also been doing, and this is probably off subject, but it is related to what we're talking about, if I'm going to be looking for that, 1 to 3x, I've been doing search funds, and that's a whole different subject. But I've been buying into private equity existing companies where I actually feel like the bet might take for the ongoing, have EBITDA. That's a different play. If I'm looking for that kind of return profile, I haven't been bucket for that.
Yeah. Yeah, no, I've been talking to investors. There are investors who are playing for smaller exits, and smaller exits are often derived out of smaller TAMs, right? If everybody's looking for $10 billion TAMs, well, there aren't that many $10 billion TAM companies. So, but there are actually a lot of $100 million, $200 million TAM companies where you can get these smaller exits, but get nice, decent capital efficient ventures that can be called successes, right?
That's right. Well, and by the way, just since we're on this subject, I'll remind people that when Facebook came out not so long ago in the public market, you could have bought it for $20. It's what, at 170, 180 today. So, you want to get 10 times your money. There are still ways to do it, and this is the only way. So for those angel investors listening, you ought to think about that as well, right?
Yeah. Jon, thank you very much. It was a great conversation. It's great to have you here, and we'll continue offline.
Well, that's fantastic. I want to encourage all your listeners, if you come to Seattle, if I can be helpful in any way, let me know. If you end up in Argentina and want to go to Mendoza and visit the winery, let me know. And thank you for your time. It's fantastic.
Thank you. Bye-bye.
Bye.
Folks, we are going to move to the entrepreneur pitch session. I'm going to give you a little bit of expectation setting before we dive in. Remember, this is a working session. And you are going to be, presenting your business, and you can feel completely safe. We have no other agenda here other than helping you put one foot before the other and move forward, remove roadblocks, etc. And whatever we can do here to strategize and brainstorm and give you those pointers, we will do. It is possible, though, that you might disagree with what you get feedback-wise. As you heard Jon point out, that because we have seen a lot, there are gut and instincts where we see that, no, this is not going to work. And for example, the obvious one is that if you don't have much validation for your business and you're absolutely dead set on raising money right away, this is not going to work most likely, because that's not how the market operates today. Unless, of course, you're a serial entrepreneur, you've done this 3 times over, you've already made money for investors, then it will work. But then I don't think you're coming here to pitch to me. So I'm assuming that if you are come here to pitch to me, you have some learning agenda as well, and I will try to steer you in the right direction. But of course, at the end of the day, it's your venture. You are going to decide on what strategy you will follow, what input you will take. We are starting, I believe, with Hugo. Oh no, Arnav Anand is going to pitch first. Sorry, just a second. Maureen is asking me to advance to Arnav Anand first. Arnav, are you on the call?
Yeah, I'm here. Can you hear me?
Yes, I can hear you fine. Let me get to your slides. Here we go. Your slides are on.
Perfect.
Go ahead, Arnav.
Hey, Shramana.
Oh, it's Arnav.
Yeah.
Arnav Anand.
Yeah. Hey, Shramana, can you hear me? Can you hear me?
Yes, we can hear you.
Okay, perfect. Hey, thanks for writing your blogs. I have been reading your blogs for some time, so quick background about SmartServ. We are an AI-powered smart assistant for people in the field. So that goes into the domain that you're having the conversation about, Jon, going after a niche market, going after underserved market. So I'm going to move on to the next slide. A quick, our growth. We have been in business for somewhere around 18 months. Started out, early this year. We were around 7 customers, and I'll allude to what our customers mean. These are small, medium-sized businesses, having services that are doing HVAC, electrical, plumbing. We have grown to somewhere around 24 customers, high engagement, more than actually 40 activity per user. It's more or less like, they have to be 100% daily active or else their business will not run. I'll move on to the next slide. We did not emphasize the metrics out here, but we have done somewhere around $40 million of transactions through a platform so far, 100,000 tickets and 500,000 notes. So that's a quick metric. Like, let me give a little bit background about myself, and then I'll come back to, so we can move on to the next slides, Ramana. Thank you. So a quick background about myself, and then, I'll allude to. So I went, so I was working at a large company called Boston Scientific here in Bay Area, and then moved on to start a company called Resolution Tube in the same space, went through Techstars, and had done a previous company called, Resolution Tube. And it was a mobile AR for troubleshooting of machines. And then, went through the venture route, did not do well, took early money, and we hadn't figured out product market fit, and, went through some tough times. And while I was, going through the customers, and, we came across an opportunity that we felt is something that is bigger, and more than the bigger part of it, like something that was solving their core pain point. And before starting the company, I was an EIR at Berkeley, right? So this company so far is completely bootstrapped, and, we have been just operating out of, I would say, like credit card and customers' money. Right? Like we wanted to hold on to raising money. What we are doing is, these are companies in the services business, as I alluded to, something like, HVAC, plumbing, and electrical to begin with. Their workflow is completely, broken. And when I say that workflow is completely broken, due to that, the technician is spending more than 10 hours per week just doing, paperwork. Dispatcher are the people in the office, and accountants are the accountants who does the work. So various stakeholder. In all, these guys are operating at somewhere around probably, 30–40%, inefficient operations. So that's first part of it. Like, let's move on to the next slide, Ramana. All right, and these companies are also not able to, serve the customer, consistently. What it means, these customers, these companies, like, I'd say like service companies, are serving their customer once, but they're losing them for the long time. And, it's just one customer, one service, and they're out. So that leads to, loss of recurring revenue, and that leads to, great revenue opportunity loss as well, like as I allude to the next. The second part of it is, or the third part of it is that, the technicians, if they have the right information at the right time, they would have been able to better service their customer, and when they better service their customer, they would be able to upsell and cross-sell, which I go into, like, other mechanics of it. But they're leaving more than $20K on the table, from their customers. Like, this is $20K on an annual basis. This is, like, we call this a Frankenstack. This is how their current workflow looks like. Any service company. This is like, we have made this after, interviewing, more than 30–40 customers that we went and talked to and built out their process map. So on a summary on this slide, these guys, they have a cumbersome workflow operating at more than 30% inefficiency. Like, every person is putting somewhere around 10 hours per week, just doing paperwork and redundant, information entry. They're leaving money on the table. They're losing repeat customers, right? So what is, like, let's move on to the second.
Arnav, I have a question here. Are you doing all of these, accounting, payroll, and the dispatching and all of that?
No, Shobana, no, we are not doing that. And that's what I'll allude to the next stage. I'll allude to the next slide. Right, so what we started out is a simple mobile-first, smart CRM platform for these guys. And what we do the basic things of it. The basic things could be like, providing them right information at the right time from the job's perspective. Like, you know, more sales opportunity about the job based on the history of it. So we plug into QuickBooks and we get the information out of QuickBooks and give the information out there. And definitely, like, you know, our database increases over a period of time. Right? Okay. I'll move on to the next slide. Right?
But you are doing CRM.
Yeah, we are doing mobile CRM. So, like, you know, I'll tell you, like, you know, so this is a smart mobile CRM, the way how we are doing it. So the fundamental level is a very, very simple, intuitive to use, you know, mobile CRM. And that's the reason, like, you know, we have seen, like, such amazing adoption. So, like, my previous company failed because it was not, you know, I was able to sell to Fortune 500 companies, you know, had good backings and XYZ, but, you know, the biggest challenge was we were not able to get adoption from our users. Like, the VPs and senior VPs were paying us contracts, but we were not seeing the usage. So in this case, like, we really focused on intuitiveness of the product and made it, like, you know, very, made it very intuitive. That provided strong, you know, adoption. Now, on top of, you know, the flat foundation mobile CRM, we are adding an assistant called Alyssa. And what Alyssa provides is assistant to all of these guys in the field, such as, you know, Alyssa is like, hey man, like, you know, John was there in the past, and John had offered XYZ, and they declined 3 of this. Like, you know, did you make sure that you offered these again, right? And we are already seeing, like, you know, so one of these customers had, you know, $9,000 increment in revenue per tag, you know, just in a quarter because of some of the smart recommendations. The second part of it, again, you know, smart invoicing aspect of it. That is, like, you know, you are trying to, you know, like, these people are good with hands. These people are not good with data, right? So you are, you know, nudging them to make better decisions to provide them, right? So on a broader stroke, if we look at it, like, you know, what we are doing is replacing the humans, like, you know, our ideal goal in 2019, or, like, you know, when we mature enough, like, it would be, so right now, like, you know, for every 2 to 4 technicians, there is an office staff who's calling them constantly and trying to do this, you know, hey, did you do this, did you do this, did you carry the right person, XYZ? So our AI assistant is going to enable them to completely, you know, or let's, like, you know, let the office staff find a better opportunity for them to do a better role for them, right?
Okay.
I'll move on, right? You know, I'll move on. Like, this is the way how, you know, things look after SmartServ. I can move on to the next slide. I think, like, you know, my time is almost done.
Can you go to like numbers? What is your so you're quoting a $400 billion target market, but what is the bottom up? This looks like a top down. What is your bottom up?
Totally. So bottom up would be like, you know, so our pricing right now is, you know, $75 every user every month. And on top of that, 5 million field technicians, you know, Shamana, I will add, like, you know, another 20% of dispatcher. So it's around somewhere around 6 million folks. 6 million folks with somewhere around, you know, like $75 every user per month. We are talking about, you know, 4 billion. We are talking about, you know, somewhere around $6 billion, you know, TAM, right? But within that TAM as well, like, you know, what we are talking, we are not, like, you know, there is a big enterprise space. It's a big enterprise space. I would give it, like, you know, another 50%. So, like, if you're just sticking to SMBs, the SMBs would be a 3 billion TAM, like, bottoms up. These are some of our traction so far, like, for $40 million of revenue, worth of revenue processed through our invoice. This is not our revenue. This is the customer.
Don't present it as revenue. Revenue is the wrong terminology here. $40 million of billing, maybe customer billing, but that's okay. So these are all revenue-generating customers. These are paying customers that you have now. 24 customers that are paying customers.
Yeah. In fact, we signed up like one more yesterday, so we are 25.
Okay, so we are talking what, about $2,400 a month, kind of roughly, monthly recurring revenue right now?
No, I think so. Like, no, not I think so. Our monthly recurring revenue is somewhere around so ARR is somewhere around 180K ARR.
So you have multiple users from each customer, yeah?
Yes, yeah. So now let me tell you about like the a user base. A user base would be somewhere around, they have 15 users, and they have like one of our biggest customers has 50 techs in the field. On the smallest side, we have 4 techs in the field, so there are 5 users. So our deal size would range from somewhere around, on the lowest end it would be $300 a month. On the top side, it would be like $2,000 a month.
Okay.
Right? We still are trying to really nail down our the mechanics out there to come up with.
How difficult is it to acquire these customers? How is it a high-touch customer acquisition? How much do you have to spend to, time-wise and effort-wise to actually get them to sign up?
Yeah. So so we're still so initial part of it was all complete hustle, right? Knocking on the doors, getting them in and stuff, and we got a whole bunch of good referrals. Now what we have done is we have set up an inside sales team out of India, right? And what we are doing is it's a 2 SDR 1 AE close. So the sales cycle would range somewhere around, let's say, in some cases we have closed a $15,000 deal over 2 days, but I would say give or take somewhere around 6 weeks would be average. So 2 SDR, each SDR making 60 calls, 2 appointments. We have seen somewhere around 30% closer if you are getting an appointment within the ICP. So,
and you're doing the sales development and account executive functions from India. These are all done by email and phone from India. Absolutely,
right? My previous company was a venture-funded company. And I did everything from U.S. in Seattle versus now I'm doing it, and it's I'm just amazed at the result.
Okay. All right. So do you have questions that you specifically want to talk about?
So what I wanted to talk about was hey, look, we are almost break even, right? And I have been just kind of thinking about kicking tires that should I try to go and raise money? And the reason for it, if this time I want to raise money, I only want to raise money from people I really, really love to be working with, and not just take money for the sake of taking money. So my question to you would be seeing the traction, seeing that, do you feel I could attract a top tier micro VC from Valley?
It depends on your customer acquisition cost. Have you analyzed customer acquisition cost, customer lifetime value, and velocity? How fast can you get to the kinds of numbers they are looking for, right? The bottom line of a top tier micro VC, angel VC, whatever, is that they want to get from 0 to $100 million in 5 to 7 years. Can you present a story where you can get to those kinds of numbers? And if that is yes, if the answer is yes, then yes.
Okay. We have the other question I had, Sramana, is there is a company there's a competition company. We look at the market differently, but still it has prevented some of the investors. These guys have raised $100 million. They have raised a Series B of $80 million, right? And we have been up against them. We have won few battles, we have lost few of them. I know that you had covered Girish during the early days. So there's an opportunity that they're priced 3 times our price product, but our product is decent enough. So I don't know if there is a giant competition, just the same way as Zendesk as Freshdesk has as Zendesk, we have one. And this is more you'd have to know the specifics to give me advice about how can we go and position still ourselves as a winner in this market.
was incubated in 1M1M, so we know that story very well, and we gave them tremendous amount of publicity early on in their process. So that strategy of doing something faster, cheaper, and more capital efficient works, and Freshdesk has eventually not turned out to be a capital efficient strategy at all. They've raised $150 million. So there are different ways of doing these things. You can do a very capital intensive venture and go after heavily funded competitors, or you can go capital efficient, and sometimes these heavily funded competitors actually flame out because they spend too much money. Zendesk did not flame out. Zendesk did very well as well. Both Freshdesk and Zendesk worked, but often we also see very heavily funded ventures often flame out, and the more capital efficient one wins. So that's, I don't think there is a one way to do this, but you have to start where you have to start. You know, I mean, FreshDesk started with $1 million in funding. You know, they got to paying customers. We got all that validated, and then the first thing we raised was $1 million to figure out, you know, the next steps, the next few steps, and then they raised, you know, the next round and so forth. So it's not like you're going to go out and raise $80 million right away. So right now, you're going to raise a small amount of money and continue to execute and figure out, you know, what are the levers that you can push. So right now, the question is kind of moot. You're just going to have to go out and figure out a customer acquisition strategy that has high velocity. That's really the story.
And we have done our CAC LTV, and like, you know, like our return time is somewhere around 3 months. Like, you know, especially doing it from India, it just gives us a competitive advantage.
That's great. So conceivably, this is going to work, and the answer is yes. I think you can raise money.
Okay, Shramana.
All right. Good luck.
Thank you so much. Thank you so much. So I'll need to drop off. Like, I need to get to a customer meeting. But, you know, thank you so much, Shramana. You guys take care.
You're very welcome.
Right, take care.
We're going to go to Hugo Perez next. I am going to bring your slides up, Hugo. Oh, you're here. Go ahead.
Good morning, Shramana and guests.
Good morning.
How are you?
Go ahead.
Well, just imagine, from the moment you pull into your 100% green community, you drive up your driveway surrounded by edible vegetation that is irrigated using reclaimed water. You park your electric vehicle in your garage and dock it into your charging station that is powered by solar panels on your roof, 100% free of fossil fuels. You'll know from the moment you arrive that you're doing your part to sustain our planet and future generations. Most people inherently want to lessen their carbon footprint, whether they be recycling or using less natural resources. We encompass all the elements of minimal living into our community. This is our product, reimagining construction, development, and sales of new home construction. The next slide.
Hugo, I'm still not clear on, are you actually building homes, or are you building tools, software tools that you're going to enable other people to build homes with?
All of that is what we're actually looking to achieve, integrated homes and actually building them from the ground up. And if you could please pull the next slide. Thank you. This is our, I don't know why I didn't translate here, but we went through the self-assessment from your website.
Yeah.
And we're having issues with the TAM, issues with the, at the time being bootstrapping, customer acquisition, and market validation. So we can come back to this. Here is something so you can get a breath of the construction versus digital age, where you and your sectors of expertise are near the top in terms of customer productivity and market growth, whilst construction is at the bottom. This in and of itself is valued at a $1.4 trillion gap in productivity. If you could put up the next slide, please. This is what we're going to do. We're going to design and build and sell the first synergistic homes combining space, time, and elements through renewable resources, energy, and utilities. We're going to execute a smart to finish build at an unbeatable price. Next slide.
So, Hugo, I'm going to be very upfront with you. This program is for technology and technology-enabled services companies. Construction is not part of our purview, except if it's technology enabling the construction industry. And the same with renewable energy. Energy is not part of our focus, except it is IT supporting energy industries. So I have to say, if you go to your self-assessment, what you put up here, you're having difficulty with bootstrapping. I'm not surprised that you're having difficulty with bootstrapping, because I imagine the cost structure of what you're trying to do is generally capital intensive, and we try to avoid doing very capital intensive ventures here.
Got it.
At least in the beginning, you know, like, I mean, we try to create strategies where you can bootstrap. Just the previous presentation that you listened to, Arnav's presentation, they have been able to bootstrap their way to, you know, some amount of revenue run rate. They've got customers, they've got revenues, etc. And that's very much part of the strategy that we follow, is to really, you know, be able to validate and bootstrap the early stages so that then we can bring in money if necessary and if appropriate. But I think construction functions differently.
In a way, yes, I totally agree with your point, but the differentiating value here is the market expansion that's available with this idea. The best companies fundamentally change the market in which they operate, and that's what we're looking to do.
I don't doubt any of your points. No. I'm not even qualified to you know, refute your points or question your points. All I'm saying is it's not our focus area, so I'm not sure how much value we can add in your business.
That's okay. Thank you so much.
You're very welcome. Okay, Maureen, who's next?
Hello.
Yes, Vivek, you are up next, yeah?
I am, yes. I have to apologize to you, actually, because I've seen some of the slides which some of the other attendees have had, and then I've produced mine after I've looked at theirs and sent it off. And it just seems like mine seems quite basic, but hopefully it'll get the message across anyway. And then if there's any way you can guide me, that'll be brilliant. So, and apologies for that.
As long as you can present a clear picture of what you're doing, I will do my best to guide you. Go ahead.
I shall do my best too. Okay, so that's me, and apologies. Okay, next slide, please. Okay, so what I'm proposing, or what I'm planning, is to produce a print-on-demand service which allows our users to upload images, change names, and write personal messages to potential recipients. These are then printed and posted by us and sent. The website isn't ready yet, so if you were to use the domain, there's nothing there at the moment. It's still in development stages. So while I do the groundwork, I'm just looking at what to do once we get ready, once the site is ready. So all the facts about the UK greeting card market is on that slide there. This comes from the Greeting Cards Association of Great Britain. The market's worth around £1.76 billion, and the stats are only getting better and better. And unfortunately, the greeting cards revolution has put the online revolution. And
this 1.6 billion is the print greeting card market?
It's the combination of both. So it's online and print.
But your proposition is to do print, right? Print on demand.
Mine is to do print as well. So I'm just giving you an example of how big the actual market is and how people are turning to print.
The only market that you're concerned about is the print market, not the online market. If the business that you're going to be doing is the print on demand business, we need to know what is the size of that market, the print market.
Okay, that's around 100 million. That's around 100 million pounds.
100 million, and so. Yeah. But that 100 million includes people who are just buying cards off the shelf and sending them off, yeah?
No. That's just the print on demand from websites only and personalizing
Okay, so
cards.
there is a print on demand greeting card market that is already quantified, and that's $100 million.
Yes, and it's absolutely huge, and it's getting bigger and bigger to the point where huge businesses, they've put one or two high streets into administration.
So $100 million from the venture standpoint is not considered a huge market. It's considered a niche market.
Okay.
So what is, there are a few questions that you need to answer for yourself. I mean, I'm going to ask you the questions. You can answer me if you have the answers, but you're going to have to find answers to these questions. One of these questions is, you know, what are you up against? So if you're saying there's already a print-on-demand business out there, that means there are vendors who are offering print-on-demand greeting cards, you know, through existing portals. What is the justification for you to start something new? And print-on-demand requires investment in machinery, right? You do need the equipment to be able to do print on demand. What is the cost structure of something like that?
Sure. Yeah, I've got the answers to all those questions. Okay, so
go on.
The thing I'm proposing, the thing that's new, is that, and this is the gap, is that there's nothing or no similar business model for, I know it sounds very small, but there's nothing geared towards the Indian or South Asian community in the UK. See, there are two types of personalized cards. There are the standard ones where people put their own photographs and then they print and then they send off. But then there are some which have ready-made templates, which are fun, which are, we call them Desi-based, you know, with a hint of sense of humor, some Bollywood, that sort of, in that sort of area. That doesn't exist. And actually, I'm doing this off the back of a business idea I had 10 years ago, where I identified a gap in the market, but because I never believed in it. You know, we had Asian wedding directories in the UK. We had wedding directories in the UK, but there was nothing for Asian businesses. And because there was nothing that already existed, I sort of did it half-heartedly. When I look back, at this moment in time, there are 9 or 10 businesses which are standing up, which are comparing themselves to me. So I didn't want to miss the boat on this one either. With reference to machinery and equipment.
So what if you sub-segment the $100 million print-on-demand business? What percentage of that is the South Asian market that you're talking about?
That I don't know. That I don't know. But I do know this. I'm pretty sure it's obviously, you know, it's going to be a small chunk of that 100 million. That's the fact.
Right. So your target market, based on what you're trying to do, is a small niche market, which is fine.
Yeah.
What is the outlay in terms of cost to get a print-on-demand operation going?
Yeah, I'll explain. See, normally, and I would have done this 5 years ago, what you need is a software called Direct Smile, which costs about £20,000, which is what the other two main businesses use. With that, they need the printing machinery and the staffing and everything else. But now, there are a couple of businesses. What they do is you host your website on their website, and they take a £200 per month fee for hosting, and that includes the ability to personalize. And I think they charge 10 or 20 pence per card to print and to send. So actually, I'm not hosting any machinery. I've got no staffing.
So you don't have to put out any upfront cost. You can just ride on top of somebody else's on-demand platform and build this business.
Exactly. It's almost like a white label. It's almost like a white label, but all I'll have to probably focus on is the marketing. Okay.
So that's then, you know, very easy to test out whether your proposition works or not.
Yep. So I was going to say.
What's on your way? What's standing on your way? I can answer your question about investors. Your market, you're operating on a very, very small niche opportunity. So this is not something investors would fund. So you're going to have to do this bootstrapped. But is there something that is stopping you from getting going, given that the entry barrier is very low?
Not at all. Not at all. I mean, initial funding is quite low as well. It's £1,000 to develop the website. It's £200 per month. You know, if it doesn't work out the way I want to, after 12 months, I haven't lost an arm and a leg.
You haven't lost that much money.
No, exactly. So
you're looking at an under £5,000 investment to test this out. So I would say test it out.
Yep.
And you know, all these questions about marketing, there are very, very specific online marketing techniques today for any digital business. So if you have background in that, then you need to start applying those techniques. If not, you need to start learning those techniques, and obviously we teach all of that.
Right, so that's why I'm probably going to be joining you once the website's up and running, and hopefully get under your wing. So yeah.
Absolutely.
Okay.
Absolutely. So
my main purpose of coming here today was to see if this business is something that you could help me with in terms of pushing out there. Yeah.
Absolutely, no problem at all. So it's a quintessential digital business, and it's a niche digital business that needs to be bootstrapped. We have all the expertise that you would need to help you with that.
Excellent. And the other thing I was going to say was this company which does the printing and the prepping for you. It's also got the same links. It's also got offices in Canada, in the US, in Europe, in Australia. They're quite large. So, like I said in the, I think, yeah, the bottom of that slide, if tomorrow the idea is to go international, you know, that's a long, long way away from here.
Start with UK and figure out what you need to do to make the business work, and then we'll worry about international.
Absolutely. Brilliant.
All right. Very good.
Yeah. Thank you for your time.
You're welcome. We have one more presenter, Jarian Paul from Trinidad and Tobago. Go ahead, Jarian. Are you on the call?
Hello.
Yes. Go ahead, Jarian.
Okay. Hi. So, yeah, like I said, my name is Jarian. I live in Trinidad and Tobago in the Caribbean. I started a business called POSable Technologies, and what we do is that we basically are wanting to bring emerging technologies to Trinidad and Tobago. Sitting, listening to the entire call today, I'm just sort of getting reminded how small my country really is as it relates to the wider world. So what happens in our country is that most people don't have technologies that are easily available and probably rampant in the wider world. So we found a product that we're starting with, and that product is point of sale. So we're bringing an iPad-based point of sale.
And this is a product, the point of sale product that you're going to be selling in Trinidad and Tobago is from the US, or where are you getting the product from?
So we have two of them actually. One is from New Zealand. So it's a company called Vend, V-E-N-D, and the other one, and it's a product called Touch Bistro. And Touch Bistro is recognized as one of the best iPad point of sales in the world. They're actually #1 in the App Store for restaurants. And then Vend is also one of the top iPad point of sales for retail stores. So we basically reached out to these companies, actually formed strategic partnerships. So we're an expert partner for Vend. We went through the entire.
So you are a distributor for these two companies in point of sale apps?
Correct.
Okay.
Correct.
And what is the price point and what percentage are you getting paid to distribute these products?
So we are getting paid from our customers a profit margin of between 20 and 30%. Initially, we set it at 40, but we realized we weren't getting that. And when we brought it down to between 20 and 30%, we started to actually get a lot more interest in it, really.
Oh, so the vendors are not paying you. You're getting a percentage of the customer's profit margin.
Well, we actually get paid twice. So we get paid by the vendors who actually buy the point of sale equipment, the hardware and training from us. And then we get paid by their monthly subscription. So we get 20% or 30%.
Fair enough.
Right.
And how many customers do you have at this point?
Currently, we have 4 customers. We've been operating for a little over a year. We have 4 customers, and we have no restaurant customers yet, but we are in talks with 10 restaurants. We're in talks with maybe 20 retail stores. Really, we've just been going out and trying to identify, okay, who is our customer? Really, that is the stage that we've been at. So we are now identifying who our customer is, figuring out exactly who to target, and we're realizing that it is the established businesses that have multiple locations but have extremely poor processes in terms of, it's so paper-based, it's ridiculous. Like, I wouldn't have even known this, being young and just growing up in this country, growing up with technology all around me. The older heads who are already 30, 40, 50, 60 have literally just been using paper all their lives, and they don't even know that this technology exists. So it's a matter of, it's a real uphill battle to impress upon them that, okay, you're using this right now, but I have this and this is better. But now it's up to us to really explain how and why this is better, and then we also provide it. So I really see us in a educational role, and I think that's what I want to position the business POSable Technologies as an educational platform to really educate Caribbean people, firstly, about technology, and we're really implementing our inbound methodology. So we basically want to become the thought leader for technology in the Caribbean, because there are other companies that do technology things in Trinidad and Tobago, but they don't practice any of these methodologies, inbound methodology in particular.
So can you tell me, you have these average deal sizes here, so $1,500 US, this is your revenue, the $1,500 US is your revenue?
Yes, correct.
And that's annual or monthly?
That is actually per retail customer. So it's not annual and not monthly, but per customer we get approximately 10,000 TT all the way up to 100,000 TT, okay, depending on the terminals they need.
Okay, let's go to your questions. So how, you know, your question, what should be your main focus in educating business owners? It really depends on what kind of a base level of understanding they're starting from, and what is their mode of engaging with an education process. Like, for example, you are using these WebEx calls that we offer to get, you know, educated, right, on your businesses, and you're getting a chance to come and talk to me here and so forth, because you are comfortable with consumption of learning material in an online format. If we tried to do this, and if our customer base, if our community only wanted to consume this kind of learning material in person, we wouldn't be able to do this, right? Because we couldn't have that many in-person touch points to be able to work with so many entrepreneurs in so many different parts of the world. So this gives us a certain, our segment, our target segment is very comfortable being coached online. So the right. question that you're going to need to understand, or ask as well as figure out is there a way to do this online such that maybe that will be a segment, a particular segment of your customer base. Is this a customer base that is willing to work with you on an online basis, in which case you have one strategy? And if the answer to that question is no, your target customer base does not want to consume education online, then the answer to your question is different. And I don't know the answer because I'm not in the market, but I can help you figure these answers out.
Right, because what has happened is really Trinidad and Tobago is, let's really call it the United States of the Caribbean, in that it is developed because we had oil money as a resource, right? So what you have is you have people walking around with iPhones and iPads and using these devices, but businesses don't actually, it doesn't translate over into the business community. They still utilize very traditional, very, I'll say 1980s, 1990s sort of equipment and systems. So we really see an opportunity to meet them where they are on their smartphone, utilizing inbound and content marketing, and really impress upon them that there is a better way.
Well, that's, kind of my question, I think, is maybe the best way for you to do this may be with telesales and online marketing to them. So you basically call, you have a target list of whom you want to work with, which are multi-location retailers perhaps, or multi-location restaurants, hospitalities, whatever segments you want to go after. You call them and you invite them into some sort of a discussion, maybe a seminar or something, and if it's not a webinar, then you may need to do in-person seminars and so forth. So what I'm questioning is your hypothesis that content marketing is necessarily going to work for this segment, and I will need to work with you a lot more to be able to guide you on specifically what is going to be the right path, but I think where you are right now, you're going to need to still figure out some of the consumption patterns and consumption comfort levels of your customer base.
Right, and I completely agree with you. So what we do is exactly like you just said. We do telecalls, so we get we walk into a place off the street, we get contact information, we come back home, put it into our CRM, end up calling them, moving them along our deal stages to set up a demo meeting, go to that demo meeting, show them the product, show them how it works, and we really go from there. So we're still in the process of collecting information from and really trying to find our target market. So we've sort of partnered with a data analytics person who really can make sense of this data and allow us to really zone in on who our exact target audience is, and that's really the point at which we're at.
Yeah, okay, so, you know, this is about all I can give you at the moment without more, you know, a lot more data, and I can help you figure out how to collect that data, what experiments to run. But you will need to run a few different experiments, a few different modes of engagement, and see which ones are working the best for you. And I can't answer how small your team should be without figuring out what is the strategy that we're going to follow to acquire customers. So you have to first answer the question of what experiments to run. Second, you have to answer the question of what experiments are yielding what kind of results, and derive a strategy, customer acquisition strategy based on that, and then derive the team size and team composition, all of that based on those. So I can help you with all of that, but that is the sequence of what you're going to need to do now.
Right. Yeah. Understandable.
All right. So if you hang on, I will explain to you how to use the 1M1M program for your, you know, learning, for all of your learning. Okay, folks. So let's actually go to that portion of the conversation, and then we'll come back to Q&A after that. Let me explain to you very quickly how to use the program. And by the way, if you like what we're doing here, please refer the program to serious entrepreneurs in your friends and family and colleagues networks. And the word serious, notice, is in bold because it takes time to build a serious business. And those are the kinds of entrepreneurs we're interested in working with, not the ones who are who have unrealistic expectations about how a business gets built, but people who really understand that there is a lot of heavy lifting involved. Everything resource-wise is at 1Mby1M.com. There's a blog. There's an Entrepreneur Journeys book series. The blog is free. The Entrepreneur Journeys book series is all at Amazon. There are 12 books. All are case study based, 12 to 16 case studies each, and you will double click down on a particular topic. These roundtables happen pretty much every week, every Thursday usually, and we are going to do the 375th session next week. And we also have the full acceleration program from 1M1M, which is 1M1M Premium, and that's a $1,000 annual membership fee for full methodology guidance curriculum. We have an online curriculum that is terrific, and people use it extensively. We help you with business development. We help you with project coaching, whether it's strategy consulting, coaching, mentoring, whatever you call it, but we have private versions of these roundtables where we actually work on your project. So the curriculum gives you methodology, and then you get project-based coaching on top of that. We also help you with financing. If your business is financeable, then we will introduce you to investors and guide you through the financing process, guide you through the preparation of the collaterals to go to investors with, and also help you negotiate. The self-assessment that some of you are already doing is a very, very good thing to, you know, run your business through. You will learn a lot of where you're getting stuck. 1M1M Basic is our curriculum-only option, which you can use if you're, as you're doing the self-assessment, if you're getting stuck on methodology points, this is a very good, you know, tool to use. So dig around on the website. There's tons of information about what to expect from the premium program, the basic program, video FAQs, lots of information about the curriculum. The curriculum is case study based. There are over 750 case studies of successful entrepreneurs, 50+ unicorn entrepreneurs, 400+ venture funded companies, 300+ bootstrapped entrepreneurs. you will find a simulation of the experience of having coffee with a 750 plus successful entrepreneurs and have the opportunity to learn from them. It's a very powerful, very inspiring experience. So all that is part of the premium program. Our methodology is lean, capital efficient, bootstrap startups. And even if you raise money, the mantra is bootstrap first, raise money later. So be prepared that to be successful in early stage entrepreneurship these days, this is how the industry operates, that you will need to bootstrap, you will need to, even if you raise financing, you're going to have to get to some level of validation before we can get you money. We still have another 5 roundtables, free roundtables this year. So pick one if you want the slot to work with me, come and discuss your project. Pick one and make sure you register online to, pitch or to attend. If you just want to attend, you can attend as many as you want. We also have in-person rendezvous that we've just started this fall. The next one is on November 9th, next week, next Thursday at 5 p.m. PST at Cafe Boroni in Menlo Park. So if you are in the area or if you're visiting the Silicon Valley area, please come and we'll look forward to get acquainted in person. And then after that, we have one on December 13th. So those are the 2 remaining ones this year. So that's pretty much it. We are ready for call-ins. If you'd like to call in, let us know. The instructions are on your screen. You can also start typing your questions in the public chat, and I will be happy to answer. Be sure to set your chat to send to all participants so that everybody can see your questions. This is also a great time for introductions. Introduce yourself, tell us where you're joining from, what you're working on, what you're looking for guidance on, etc. And while you're doing that, let me introduce you to Irina Patterson, who on the 1M1M team will be your point of contact. You can contact her, Irina, at 1Mby1M.com and ask any questions that you might have about joining the program. Questions, anybody? Questions, comments, introductions? Yes, no? If you don't have any questions, we're going to adjourn. Vaijayanti Kulkarni has a question. From Oracle Pune, yes, Kulkarni? No question. Okay, great. So you are planning to apply for the Oracle scholarship to join 1 million by 1 million, yes? Oracle, by the way, folks, for those of you who are from Oracle here, welcome. We have applications due next week, I believe, for the Oracle Scholarship Program. So be sure that you are, caught up on, enough roundtables, either attending live roundtables or listening to them on YouTube, because as part of your scholarship application, we do assess whether you are listening to roundtables in the preparation phase. You've been offered roundtables for the last 6 weeks or so. So make sure you listen to a few roundtables on YouTube if you haven't done so already, and include that in your application, okay? Mahesh Sharma also from Oracle Bangalore, great. Shankar Tagamiritu also, thank you. Priya Penugonde from Oracle 2, thanks for the session, very useful. Going through recorded sessions as well, very good. So it looks like there's a lot of Oracle people who are ready to apply for the scholarship who are in the room right now. So I'm thrilled to see you here, and I look forward to reading your application essays next week. One thing you should highlight in your application essays is your experience with online learning, because this is an online learning program, and in the essays we are looking to find signals from your application that you are comfortable and adept in online learning, and you're a sole self-motivated person who can take the tools and really educate yourself using the framework of the 1M1M program. Shorin Charkar is asking, how can a bootstrapped entrepreneur decide on the right timing for an exit or capital raise? You know, these are the kind of sophisticated decisions where I recommend that you use the premium program and the coaching portion of the premium program. So put together your presentation of what you have in your company right now, and I will be happy to guide you through that decision-making process. Priya Penugonda, do we have to have an idea when applying for the scholarship? No, Priya, you do not need an idea, but you do need to explain why you're motivated to do the program. And then you can actually, we recommend that you go through the first 3 months of curriculum study process if you win the scholarship, and then come up with the idea, because you will come up with a more robust idea using the framework and the methodology under your belt, as opposed to coming up with an idea right away when you're applying. If you already have an idea, that's fine. But what we're looking for is really your motivation to commit to doing the heavy lifting of studying and learning the methodology of the program. Sharon, did I answer your question? Do you have anything else that you want to ask? Anybody else? Any other questions? All right. Okay, folks, we're at the end of the session. I actually have to run to another meeting, so we will talk again next week, and hopefully I will see some of you in person at the rendezvous next week. Good luck, everybody, for those of you who are applying for the scholarship that your application deadline is coming up for, and see you soon. Bye.